We all know what effect the Oracle of Omaha, obviously Warren Buffett, had on the stock market. But are you aware of the wonders the Oracle of Boston is pulling off? Baupost Group's Seth Klarman turned $30 million into $30 billion due to his investing strategy and portfolio. Before we step into the investing details of the Baupost Group's Seth Klarman, make sure you press the like and subscribe button so that you stay updated regarding everything that's going on in the world of finance and stock market investing. Welcome to 5-Star Finance, the place where you learn how to achieve financial freedom. The president of the Baupost Group, Seth Klarman, is pretty much unknown for most of the people. But his track record speaks for itself. Becoming a billionaire by investing in the Warren Buffett way is not a small feat by any measure. The wonders are not restricted to himself, but his firm is managing more than $30 billion in assets. So how do we put that track record in perspective? What was the investing strategy and portfolio that helped Klarman pull off wonders? Let's dive right in. The margin of safety. The three most important words, according to Warren Buffett, are margin of safety. And if we jump into the details, it literally means don't lose your money. To be more particular, that also means you don't have to buy at the actual price. Always try to pay less than it's actually worth. That means you need to try to buy those $20 bills for $10. That's the whole secret to great investing. For example, if you're planning to invest in a business, but that business is vulnerable and you know it, you need to keep a large margin of safety just to be on the safer side. Imagine you're driving a truck across the bridge, and the bridge says that it can hold 5,000 pounds, and you've got a 4,200 pound vehicle. Now, if the bridge is 6 inches above the ground it covers, you might feel okay. But if the bridge is passing through the Himalayas, you might feel wary about it. As Klarman puts it, the margin of safety is achieved when you buy securities at a price lower than their actual price, so that it makes room for human error, bad luck, or extreme volatility in a complex, unpredictable, or rapidly changing world. He also goes on to say that always buy with a discount to underlying value and give value to tangible assets over intangible assets. And you also need to consider the worst case scenarios before making any decision. Flexibility. Having a flexible mindset is pertinent for making good investing decisions. You don't need to look where everyone else is looking. Take a look at the Baupost Group, for example. They've more or less targeted the securities that were the less complex. Moreover, they always focused on the simple fact that lesser competition means lower price. According to Klarman, it doesn't matter if an investment is public, private, fractional, or full ownership, or in debt. All that matters is substance instead of form. The mantra of the Baupost Group has always been to go where there is inefficiency. That is the core reason of Seth Klarman's Baupost Group. They simply go after complex securities. The reason being that these securities don't receive enough attention. It's safe to say that Baupost prefers messy situations to generate all their equity from. Take a look at this example. Klarman once said that whatever profit or success the Baupost Group achieves is against a troubled background. Back during the financial crisis in 2006, Klarman and his team invested in auto finance companies like Ford and GMC. At that time, they purchased a bond for 40 cents a piece. Again, the margin of safety. They literally invested 10% of their portfolio, and as a result, they ended up making $1.2 billion of profit. Long-term orientation. The long-term orientation is a key strategy for the Baupost Group's success. Now, if you want a high return rate from a company so that the reinvestment opportunities also step in, you definitely want to own that company for a longer while so that the value of your shares goes on increasing. Let's just say that a business generates cash flow of $1 million per year. To keep it simple, its return on capital is 20%, and the business has the opportunity to reinvest that capital annually at that same rate of return. After 3 years, the combined cash generation and the rate of return together amounts over a 6-fold increase in free cash flow. Being able to structure your orientation strategy on the pillar of long-term orientation is very important to hunt down your financial goals. There are many firms out there that have profits on offerings only in the longer run. But unfortunately, they meet clients that are looking for quick-fire results. Such a combination leads to a mismatch, and the profits are also below par. Baupost clients are usually undoubtful and perpetual. They are usually there to stay because the company has generated mutual trust between the clients and the firm. In this way, they are able to generate world-class profits for their clients. But the most important factor over here is that Baupost can choose which investors they want to let in from the door. This is a key competitive advantage, and this also demonstrates how Baupost has been able to stay at the top for such a large time span. Focus on business risk. As many investing strategists out there want you to believe that risk comes in as beta, that's not the case for Klarman. According to him, risk is described by both the probability and the potential amount of loss. This also accounts to how a value investor chooses to look at the stocks. Now, as an investor, you are trying to buy a piece of a business, however small that may be, and as a value investor, you're trying to buy into that company, and the sum of the cash flow will be or should be less than the amount you're paying. As per Klarman, increase in volatility brings more opportunities for the long-term investor whose focus is on the fundamentals of the business. It's all the matter of looking at the business for yourself. The greater the risk doesn't mean the greater the chance for you to make big profits in the game. Don't be fooled by that. How can buying dollars per cents be risky? Absolute orientation. One of the main reasons for the gigantic success for Seth Klarman and the Baupost Group is their absolute orientation. Most mutual funds out there are mainly focused on accumulating assets under management. The main reason being that investment funds earn management fees as the percentage of the assets they manage. The bigger the slice of the pizza, the larger the fee will be. Most of the funds also charge additional fees based on the performance of the funds relative to a benchmark. Underperforming your benchmarks will mean the clients leaving your company or simply leaving through the door, and ultimately the game will come down to haunt you. The more clients leaving, the greater the deficit for you. Or to be more particular, the clients leaving will mean that your fee is leaving and vice versa. This is the core reason why many funds chase relative performance, and investment managers are afraid of investing in anything that might have a different prospect or a different rate of return. The fact to be noticed is that Klarman and his team only focus on the absolute returns rather than the varying returns, which also means that they don't care if they are underperforming. What's important for Seth Klarman is that they need to make good and quality investments, even if it goes into many years into the future. The goals heavily revolve around long-term orientation. If you want to start investing as a value investor, you must know that there are a total of 6 stock categories, and the way to analyze each of them differs. Make sure that you refer to the free ebook in the description below, which explains everything you need to know about the 6 different stock categories. So what do you think about these principles of stock market investing employed by Seth Klarman? Which one of these do you think is the most important? Let us know in the comments section below. Subscribe and turn on notifications so that you never miss another video. Check out this video we handpicked for you, and we'll see you in the next one.